All right, let's dive right in. Today, we are tackling one of the most talked about and, frankly, one of the most contrarian macroeconomic forecasts out there right now, the David Hunter thesis. We're going to break down his whole secular terminal phase idea, which is basically a roadmap that predicts this huge, dramatic three-act play for the entire global economy. And right from the get-go, the stakes are just incredibly high. This is not some forecast for a little market correction or your average recession. I mean, you can see it in his own words right here. Hunter is calling for a crisis that could actually make the 2008 financial crisis look small. So let's unpack the thinking behind a prediction that massive. So to really get our heads around this thing, we're going to follow this roadmap. First, we'll look at the big picture, the end of the super long supercycle. Then we'll walk through the three acts he predicts: the melt-up, the bust, and the reset. And finally, we'll tie it all together and see what the strategic blueprint actually looks like. To really understand where this thesis is going, we have to start with where we've been. The whole forecast, the entire thing, is built on this one core idea that a massive 43-year bull market that kicked off way back in 1982 is finally, right now, in its last stage. And look, this wasn't just any bull market. This was a secular bull market. It was born when Fed Chair Paul Volcker basically broke the back of inflation in the early 80s. That one event kicked off decades of disinflation and falling interest rates, which created this incredible tailwind that just pushed stocks, bonds, and real estate higher and higher for more than 40 years. Okay, so let's get to the first act of this drama. This is the phase Hunter thinks we're in right now. He calls it the melt-up. And this isn't just another rally. No, this is supposed to be the final, explosive, totally parabolic blow-off top to that entire 43-year cycle. And the price targets for this final push, they are staggering. Just look at these numbers. We're talking about the S&P 500 possibly hitting 9,500, the NASDAQ surging to 32,000. Now, according to the thesis, this has nothing to do with fundamentals. It's all psychology. It's pure FOMO, the fear of missing out, as all these big institutional investors who've been defensive for too long are finally forced to pile in and chase the market higher. So if that's the setup, how would you strategically play it? Well, the thesis points directly to silver as a key way to do it. People often call silver gold on steroids because of its crazy explosive potential. And historically, in these kinds of wild rallies, silver has this habit of starting slow and then just dramatically outperforming gold. Now, if you want to get even more bang for your buck on that move, the thesis zooms in on junior silver miners. You can track a lot of them with the ETF, ticker SILJ. These are the smaller, more speculative companies out there looking for new silver deposits. And because their entire business lives and dies by the price of silver, they have what's called operational leverage. And this is the magic of operational leverage. Let's just walk through this example because it really makes it click. Imagine a miner's all-in cost to get 1 ounce of silver out of the ground is $25. If silver's trading at $30, cool, they make a $5 profit. But what if silver skyrockets to $75? That's a 150% jump in the metal's price. But their profit? It doesn't go up 150%. It explodes from $5 to $50. That's a 1,000% increase. That is why these miners can have such mind-blowing returns. But here's the huge, dramatic turn. This totally euphoric melt-up, it's not the start of some new roaring 20s. No way. According to this thesis, it's just the prelude to a catastrophic global bust, a full-on systemic liquidation event. So the big question is, what pops the bubble? Right? A move this insane needs an equally powerful trigger to bring it all crashing down. And according to the thesis, the seeds of that destruction are actually planted on the way up. The way the collapse is predicted to happen is like a cascade of dominoes. It starts with a policy mistake, probably the central banks being way too slow to see how fragile the whole system is. Then once the selling really starts, liquidity, it just evaporates. Poof! All the buyers just vanish. And that triggers margin calls, which forces anyone with leverage to sell whatever they can to get cash. Of course, that selling pushes prices down even more, which triggers more selling, and you get this vicious, self-feeding downward spiral. And the predicted result of that spiral is a number that is just, it's hard to even wrap your head around. An 80% crash in the stock market. That would be one of the biggest destructions of wealth in modern history. It would wipe out not just the gains from the melt-up, but years, maybe even decades of returns.
During that initial panic of the bust phase, everything gets sold. It's what they call correlation one. Investors aren't picking and choosing, they're just hitting the sell button on whatever they can to raise cash. And that means even the traditional safe havens, things like gold and silver, they get hit hard too, as people sell their winners to cover all the losses everywhere else.
A bust of that size would absolutely force a response from global central banks like we have never seen before. And that brings us to the third and final phase of the whole thesis. The reset. To fight a deflationary collapse on this kind of scale, the thesis says, the Federal Reserve would have to unleash a monetary tsunami. Hunter predicts a response somewhere in the neighborhood of $20 trillion. I mean, that's an amount that just dwarfs what they did in 2008 and 2020 combined. And this flood of new money is predicted to cause a massive, seismic shift in what leads the market. That 40-year dominance of tech stocks and financial companies, over. The new leaders would be the companies that produce actual, tangible stuff. Commodities, industrials, energy, hard assets. All the things you can't just print more of. This shift leads to some truly eye-popping long-term price targets for the 2030s. I mean, in a world that is just awash in all this newly printed money, hard assets get repriced dramatically higher. The thesis is calling for things like $20,000 gold, $500 silver, and even $500 oil as the final result of this huge hyperinflationary reset. Now, it is so important to remember this is a deeply contrarian view. To keep things balanced, we have to mention that other very smart analysts like Ed Yardeni see a totally different future. His whole Roaring 2020s thesis suggests we're going to see continued economic growth. It's a completely different world from the bust scenario we've just been exploring. Okay, so we've journeyed through the wild melt-up, the terrifying bust, and the unbelievable reset. Now let's pull it all together and see what the strategic blueprint for actually navigating this three-act drama looks like. This question right here really gets to the heart of why this whole thesis is so challenging to think about. I mean, for decades, the winning strategy has been buy and hold. Just put your money in an index fund and forget about it. But a forecast like this one, a forecast for an 80% crash followed by a complete change in market leadership, well, that suggests a passive strategy could be an absolute disaster. It really demands a much more active, much more tactical way of thinking. And this timeline really sums up the whole tactical approach in one shot. In phase one, the melt-up, you're all in on risk, things like junior silver miners. Then, as you get near the top, the strategy calls for a complete shift into capital preservation mode for the bust. That means things like long-dated U.S. treasuries and just plain old cash. Then finally, after the bust, you make one last rotation into hard assets to ride that huge inflationary wave of phase three. So at the end of all this, we're left with this one big provocative question. Is the Hunter thesis a prophecy? A detailed prediction of exactly what's going to happen? Or is it maybe better to think of it as a warning? A really stark reminder of the kinds of extremes that can build up in a financial system that's got more debt and leverage than ever before. Ultimately, look, this is just one forecast, but it's a really compelling one. And whether or not it plays out exactly like this, the David Hunter thesis really forces us to think about possibilities that are way outside the mainstream. It forces us to think critically about where the global economy might be headed. And only time, really, is going to tell us the answer.